talk about a number of topics. We'll start with the macro. We have a Fed meeting coming up tomorrow. And suddenly, in the last week, every Fed commentator, or most of them at least, have coalesced on a 50 basis point rate cut tomorrow. And this is something that I have been talking about for a few weeks and kind of felt like the odds were in favor of 50, but by no means was it a certainty. So I'm a little surprised just how certain some people are all of a sudden, because I still feel like it's very much a coin flip tomorrow. Although I would like to see 50. What are your thoughts, Eric?
I think I was probably a skeptic on the concept of 50 basis points, and like you, I'm a little bit surprised to see all of these, Fed whisperers, if you will, suddenly talking about 50 basis points. You can't help but think they're getting, tipped or something. There's guys like Nick Timmeros who definitely gets tipped, and he seems to be talking about it. Fed said they were going to cut this meeting. We've all known that was going to happen for weeks and weeks now. I'm still sort of in the, I have to admit, I'm still sort of in the camp that I'm not seeing enough weakness in most of the macro readings that I'd personally be kind of freaking out. I mean, I saw 3 or 4 guys yesterday, calling for 75 basis points, which I'm just like, what? I'm not saying things are weakening. They definitely are. You can see the employment picture is weakening for sure. There are a couple of, fairly well-known indicators that are pointing to near-term recession. None of these things are guaranteed. The SAM rule, named after Claudia Sam, an economist, it triggered after the last payroll, the last non-farm payrolls. It doesn't have a long track record, but it does have a perfect track record. When it triggers, it's basically triggered and called for a recession 7 times out of 7, and no false positives that I know of. The other measure that certainly, that I think is concerning is in the last few sessions we've seen the yield curve basically flatten out, and the very, very long inversion that we've gone through essentially came to an end. And if you go back and look at history, everybody talks about how yield curve inversions are precursors to recessions, which they often are. But the sort of the near-term indicator, if you will, the problem with yield curve inversions is they're pretty much useless when it comes to timing. Yield curve could be inverted for 2 months before a recession, could be inverted for 2 years. One thing that has historically been a pretty good, very near-term indicator of a recession start is actually when an inverted yield curve uninverts, which has happened during the last week. So, with those 2 things in mind, I'm definitely looking over my shoulder. But when it comes to a lot of the kind of the standard macro readings, retail sales, ISM, stuff like that, they don't look great, but they don't look like a recession either. But I'm aware of the fact that most of these indicators are lagging. So the truth of the matter is, you almost never know a recession starting until it does. So, but I guess I've been in the camp that I think the Fed cuts every meeting to the end of the year, but I wasn't really expecting 50 basis points. But it sure seems like the market is, and the market probably won't be happy if it doesn't get what it wants on Thursday.
Wednesday. It's actually tomorrow. Tomorrow at 2 p.m. And then they won't have another meeting until the day after the election, which sort of complicates things. I think it complicates things both ways, because they could go 25 now and keep it fairly neutral, not shake up the boat much, with
Yeah.
25, and then they could do 50 the day after the election. Regardless of what happens, they'll have the kind of all clear to do whatever they need to do at that point.
Yeah.
But also that's like what, 6 weeks, 7 weeks away, so a lot can
Yeah.
happen. And then the
Yeah.
Fed has this thing where they say we don't let politics affect our choices at all, which obviously is not completely true. But if they're seeing weakening in the data even more than what we're seeing, then they should do what they need to do, and they should cut 50.
No,
But
no, it's
the
a good point. I mean, the spacing between the meetings is probably a factor, and I don't think it's a coincidence that so many former FOMC members are calling for 50. That they're probably looking at the spacing between the meetings and just saying, look, it's better safe than sorry, um, and the markets hasn't fully priced in 50 basis points, but it's 2/3 of the way there. Maybe it's a good idea not to not to surprise the market and to give the market what it wants, because you got a pretty big lag to worry about before the next meeting. And this one also, the quarterly meetings always have more potential to shake things up, because of course that's when we get the full reading and the dot plots and all that stuff. So that's going to be quite interesting to see what the dot plots look like this time.
Yeah, for sure. And if they look like 125, or God forbid 150, which I don't think it'll be 150 by
No,
the end of the year, but
no,
if it's 125, that's still a big deal.
yeah,
And a
yeah. Even
50,
even if they did 25, and 2/3 of the FOMC members were pointing to 125 by year end, the market would still be pretty freaking happy, I think.
yeah, yeah, for sure. I mean, that would be a strong signal, and that's definitely an option. That's definitely an option that they have. But if you look at the history of 50 basis point rate cuts, there's not been many of them. And 100% of the time, it's during a recession or right before a recession. In 2007, 2008, obviously the shit was hitting the fan with the global financial crisis. They cut 50 a couple times. 2001, they cut 50 once during that recession. I'm trying to remember. I think they did 50 during 2020 pandemic at the start of that. So it's
Yeah,
it's 100% during a crisis.
yeah,
So they have to know that also there's some signaling there. If they go 50, there's a signaling that they're pretty worried about the economy.
yeah, yeah. No, I mean, I think that's part of the reason why I've been skeptical about 50 is because I'm not convinced they're as worried about the economy as a lot of other people are. That doesn't mean they're right. I'm just saying that's my senses are not as worried about it as some people in the market are.
Yeah, I agree. I mean, there's some economic data that's hanging in there pretty well and is not
Yeah,
characteristic of a recession. And then there's other data and there's trends in the data that are very concerning. Um, Consumer sentiment and consumer income expectations are cratering in the last couple of months. That's concerning. Obviously, the trend in non-farm payrolls and the revisions is concerning. But then if
yeah,
you look at the weekly jobless claims, it's not alarming yet.
no,
I don't know. It's complicated. Like I feel like this could go either way. I'm leaning towards 50, but I'm still thinking there's definitely a possibility that he could go 25 and just basically point to 50, in November in the dot plots and go home. So it's pretty unclear.
yeah. Well, it's just everything is complicated a lot. I mean, I think people underestimate how much COVID has complicated things. You saw such gigantic, you know, four sigma swings in just about any economic indicator you can think of over a short period of time. And even even Claudia Sam, the originator of the Sam rule, even she was sort of like, my rule's triggered, which, on paper means there's a recession starting like, Thursday, but I'm unsure because this specific cycle is so crazy, with so much amplitude in both directions. I just don't know whether we can trust sort of the traditional indicators, and that's, I mean, I kind of feel the same way. I mean, things don't look that bad, but there's some things that look definitely near recessionary. But a lot of these things where you're looking at diffusion indexes, for instance, when you get these kind of huge high amplitude swings, it can really be misleading because it's basically taking changes over the previous 1 or 2 or 3 time periods. And when you get those kind of swings, not to put too fine a point on it, it just fucks up the stats. So I don't know whether that's a factor. It's one of these things that 3 years from now we'll know whether it's a factor, I guess. But it's hard to believe that isn't impacting things some. So it makes me a little leery of some readings.
Yeah. I mean, I agree. So, just one more comment on this, and then we can move on from the Fed and what's going to happen tomorrow. But if I look at the CPI and the last 3 CPI prints, and the annualized rate's now 2.1%, on the core. So, and then I look at some of the trends in the inflation data. Look at energy prices. Look at some, the rental data in some big cities in the U.S. I'm not worried about inflation here, and I think there's a very good shot of a downside overshoot now. So that would then lend favor to 50 basis points tomorrow. But on the flip side of that, what concerns me is if they go 50 tomorrow, and the market has this way of getting carried away with itself and then saying, well, they went 50 today, they're going to go 50 in November, and they're going to go 50 again. We might have a 1999 stock market bubble, if the Fed cuts 50 at 3 consecutive meetings. I mean, like, this could get crazy. If you think back to the late 90s, there was like an Asian currency crisis. Then there was long-term capital management. The Fed did all these emergency actions in late 98, and 99 was just a roaring, insane stock market bubble, and I feel like the setup right now could be similar to that.
Yeah, I mean, on the face of it, if they did 50, my assumption is, well, okay, they've used up their bullets. Not that they won't do more cuts, but they won't do more 50s. But yeah, you're right. I mean, Wall Street has a habit of projecting whatever today's results are infinitely out into the future. So yeah, it's quite possible if they do 50, you start getting a bunch of guys on Wall Street going, yeah, they're going to do 50 every meeting until the end of the year. It's game on, party like it's 1999, basically. As long as that includes the gold sector, I don't give a shit. Yeah, you go, girls.
Yeah,
Bring it on.
I feel like that's what will happen. I think I think you just said it. I think it's going to be party like 99, and the gold sector will also party like it's 99, except not like it was 99 in the gold sector, but like it was in the Nasdaq. I think it could be pretty wild if they go 50 and point to 50 again in November. I think Wall Street will run with that. So that's the only thing that gives me pause, that they won't want to generate that kind of, or maybe they will, maybe because then Trump won't get elected. I got no idea. We'll see what happens tomorrow. We can analyze it 10 ways to Sunday, and we still don't know exactly what's going to play out. But I do want to ask you about gold and this move that we've seen, pulling it back a little bit today, but still close to 2,600. In my mind, a little downside is totally healthy ahead of the Fed. What's your sense for this gold move, like where we're at in it? I've seen some investment banks raise their price targets. Bank of America's at 3,000 now. Is this getting a little ahead of itself?
Well, I mean, if anybody who's a long-term gold or gold stock investors, we're all beating curves. Let's be honest. You just you always expected the other shoe to drop and for it to land on your head. So I preface all my comments with that. But when this move started a few weeks back, I wrote that to me this kind of feels like a repeat of the sort of the April May move, and if it is in fact a repeat of that, then yeah, it's got another $200-300 to go. I don't see any obvious negatives, other than just profit taking or hedge funds getting cold feet and stuff. I mean, that's what the last big drop we had at the start of the month. That was arguably skittish late money. I assume some of those guys are coming back in, but when you look at the trend, you look at the trend in yields, you look at the trend in the dollar, you look at continued, and it looks like broadening central bank buying, and the leading edge now. I mean, you're starting to see more generalist retail and probably hedge fund money. You're starting to see buying in the in the gold ETFs, which just what wasn't happening before. Even with some of the big moves earlier this year, it did nothing. We're starting to see that buying. I'm I mean, I hate to say it because as somebody who follows gold all the time, like I said, I hate sticking my head out of the foxhole, but this feels very similar to the April May move. The one caveat I would say for that is that we've already had big moves in yield, big move down in the U.S. dollar. I'm not expecting equally large moves going forward unless the Fed really surprises with cuts, or unless we suddenly start getting really shitty economic data. I can certainly see the dollar going lower. I can see yields going lower, but I'm not expecting anything like the move we saw already. So that's the one caveat I'd put on it. But the upside is, and we're still barely seeing it. I mean, if one of these days the rest of the market notices, and most of the market apparently hasn't noticed, then yeah, I do think that continuation of a move, basically a repeat of the spring move where we go to 2,800 or something. That's what it feels like it's going to do to me.
Yeah, I feel like that's an important point. Like, it's always uncomfortable to talk bullish, right after a $500 an ounce move. It just feels uncomfortable. It's like, oh shit, I'm going to be the moron who got more bullish at the top. And as precious metals investors, we're just incessantly paranoid that somehow there's going to be a smackdown the next day. So definitely, yeah, I agree with that caveat. But then on the other hand, this setup looks, and just forget about all the fundamentals, forget about the Fed, forget about China, forget about the prospects of World War III, forget about the insane shit show of the election in the U.S. and who's going to get assassinated next. Just look at the chart, gold and silver charts on multiple time frames. I mean, I haven't seen many bull markets that are this good looking. It's a beautiful structure. It's not overheated yet. It's keeping its name out of the papers. Yeah, we're talking about it, and a few people on X are talking about it, but this is not in the major headlines. People are not lining up at coin stores in the U.S. to buy gold coins, gold bars, silver bars. So this is still. It feels like there's room here. Obviously, I don't love to see Bank of America putting out a $3,000 price target and that being picked up by CNBC, but it is what it is, and you're gonna have people talking about a market that's rising. It's how it goes in 2024. So yeah, that's I kind of feel like we're in alignment there. That yeah, it's had a big move, and markets are forward looking, so it's definitely pricing in some of these things. There's no doubt about that. And there is some room for disappointment if the Fed only goes 25 on Wednesday. But I just feel like if they go 25 and gold drops $50 an ounce, I want to buy that dip. I'm not ready to call the top here yet. Yeah, and I actually feel like silver has a little more room. Like on a percentage basis, I feel like silver could be getting its legs here, especially if the Fed goes 50 tomorrow. I mean, we could see silver really move.
Yeah, silver continues to disappoint silver bugs. He keeps trying to stick above $30. We've got another shot here with it at 31, and yeah, I mean, to me it feels like if it's going to do it, it's got to do it now. I mean, you know, guys that have followed both markets for a long time tell me, gold usually moves first. Well, I mean, gold's moved pretty good. I mean, I think it's time for silver to join the party. Past time, probably.
Yeah, it is time. So speaking of silver, let's talk about junior mining. So Vizsla Silver,
Yeah.
VZLA.
Yeah.
Well, they've had a lot of news in the last few weeks, some great drill results, and then they delivered a very large financing, very impressive
Yeah.
financing on Friday that whacked the stock. What say you, Eric?
Yeah. Yeah. I mean, I respect the fact those guys can do a $65 million bought deal. I mean, that's no mean feat in the mining sector, as we both know. I was a little ticked off about it at one level because I was really hoping, the move that it looked like was developing in silver, was finally going to get, Vizsla clear of $3 and staying up there. Obviously, you do a 260 bought deal. Guess what the price goes to? Shockingly, it goes to 260. It even dipped below it, which is a little surprising because there's no warrant. And I'll give them points for that. I mean, it was a 10% discount, which is that's about average for a bought deal. I mean, nobody loves that discount, but that's pretty standard in a bought deal. And there's no warrants. So I don't think they're going to have any trouble filling it. So I think it's good news. But yeah, to me, you got to figure that's going to hold back the move higher to say 350, $4. The simple truth is, when you do a bought deal, there's a lot of guys buying the deal are replacing stock they already own. I mean, in this case, they don't get a warrant, but in the case of some of them, they're just being, I guess, stand-up guys and saying like, yeah, I'll take what I took last time, but they roll stock over to pay for it. So it's basically a 45 million share placement, or 45? No, it's 25. It's 25 million share placement. So I would think you got to trade 10 or 15 million shares to deal with that. The good news is it's pretty close to doing that already. It's a huge volume on the day it was announced. So I'm hoping we start to see it move, assuming silver moves, we start to see it move higher. And it might be as soon as a week, which is pretty fast for a bought deal, but they're doing the volume. I still really like Vizsla. I like management. I love the project. I mean, I just think I think Panuco's the best silver project out there, period. I think it's going to get significantly larger. The grade's fantastic. The thing's going to be a license to print money. And again, as I've noted before, when you look at the valuation it's got, the valuation that it's carrying, obviously means you're not going to get a 10 bagger from here or anything like that. It's already got a big valuation. The upside of this for management, and this announcement's a good example of that, is they're not going to fall into the Lassonde trap. Part of the reason why you get the Lassonde curve trap is that you've got companies carrying valuations that are small compared to the capex requirement for a mine build. So you get into this chicken and egg thing, like how the hell are they going to finance this, and are they going to do like 400% dilution to get the equity portion? Much like Silvercrest was a few years ago, Vizsla's in the happy position that with the market cap they've got, because they could go out, get the debt portion of what they needed for construction at Panuco, and basically, probably much like Silvercrest, do the equity side with an overnight bought deal, boom, done. So they're not that tells me they're not gonna fall into the Lassonde trap. I don't think, which everybody always expects for the developer. This is one that I don't think you're going to see that.
Yeah, that's a good point you make. That's a fair point. I guess my question is, look, you always take the money. Mining is an expensive business. I think they've been using 10 drills. They've got a pretty big staff down there in Mexico. $65-70 million gives a lot of cushion, gives a lot of runway, keeps the company safe, regardless of what happens over the next few months, with the macro. I get that. I totally get that. They took advantage of a strong silver market and stronger sentiment for silver juniors, and they took the money. I get that. But from an investor standpoint, I just wonder, like, your chart is just about to break out. You're about to actually get some real traction, and then boom, Friday afternoon financing. Is this the problem with being a junior mining investor? Is every time you get some traction, you get some tailwinds, the company's just going to finance and kill it?
Yeah, I mean I wasn't I wasn't happy to see the announcement. I mean great, they're getting the money. It's good that they'll have the cash. They can just go balls to the wall for the next year plus. But I really wish they would have waited and maybe tried to do it at a better price, because same as you. I mean, I was looking at that $3 resistance area and like, okay, silver looks like it's going to move. I think they're going to get it through this time, and then boom, it's just like, oh, seriously, you guys, really? It's gonna be that much harder. I mean, it's probably made $3 even tougher resistance. Even guys I know who like the stock and own the stock are sort of looking at it now and going like, fuck, these guys capped this thing at $3. Is everybody going to be so paranoid now that they're just going to throw up offers once it gets near 3?
Yeah. I mean, I feel like there's points to be made for both sides. It's not clear, what the right move is. I respect management's choice, but definitely I get the optics from an investor standpoint, and it does kind of kill the vibe for a while.
Yeah.
The last time we spoke, we talked about Founders Metals. That had, speaking of $3 a share, that had a run above $3 a share. One of the big winners in the gold juniors in 2024. And then it kind of lost its momentum in August. What happened with Founders?
I mean, what seemed to be the proximal cause to it was, management. This is pretty much across the board. It wasn't like one guy. There was, I think, 6 or 7 people. They exercised their rights. They had rights to stock units, and in Canada, and basically everybody in the management team is Canadian. It's a Canadian company. In Canada, when you exercise rights or when you exercise options, either the value of the right or the difference between the current share price and the value of the price of the option is income. It's immediate income in Canada. It's not capital gains; it's income. So anybody exercising these things generates a huge tax liability. Management dealt with that by turning around and doing a cross. I think it was about 1.5 million shares altogether. The cross, as it turned out, was taken by 1832 Management, which is who I would have guessed. 1832 is a well-known gold fund up here. Rob Cohen runs a very good track record. They were, I think, the biggest investor in Great Bear. I knew they were a significant investor here, and one of the reasons I like seeing them come in is they're one of 2 or 3 funds that has a reputation for buying in the market, not just buying placement. So they took the cross, but not to put too fine a point on it, that transaction seems to have pissed a lot of people off. It didn't. I wasn't that bothered by it personally. I mean, look, I get it. The optics, well, they're terrible, but I know a bunch of the management. These aren't a bunch of graybeards like me that have been around for a while and have made some money. By and large, these are guys in their 30s with young families that don't have that much money, that they can't exercise rights and suddenly find $300,000 for tax liability. So I wasn't personally that bothered by it, but a lot of other people clearly were, because that was definitely the momentum killer. That's when it rolled over, was when that was announced, and they put out some good exploration news since then. That they put out the news because 1832 had to announce it, that they were in fact the other side of the cross, and the stock got down to 220. It's back to about 260 something now. I'm not that worried about it. I wasn't thrilled about that transaction only because of the optics. Like I said, personally didn't bother me. I know management. I like management. Personally, I think they should make some money out of it. I'm totally fine with that. I think it'll be fine, but I definitely want to see it get back to $3 because this dip was the first one in over a year where you didn't see a higher low. This was a lower low. That was a bit concerning, to be honest. We'll see how it goes. It's moved back up 45 cents, so I'm not freaking out about it. I'm not a seller. I'm very comfortable with the stock. I think it's going to be, I've said it for a year now. I think this is going to be a large deposit, and I think it's going to be taken out at a much higher price than today's. I was pretty happy to see Agentis put out a buy recommendation yesterday, and I don't generally even get or pay attention to those things, but I happen to know Rob Gray at Agentis quite well, and he's a very smart guy, and I was pretty happy to see him put like a 1050 NAV on the stock. Kind of like, okay.
Yeah, it's Michael Gray.
Yeah, Mike Gray. Sorry,
Michael Gray. Yeah.
He's a good guy, but he's a smart guy. He's been on a lot of things that have worked early, and it's because he's a geo, and he's got a pretty strong, he's got a good nose for stuff that's going to work. I mean, he was on Snowline quite early, and a few others like that. Seeing Rob put that kind of NAV on it, and NAV isn't where it should trade. I mean, developers trade like half a NAV, so essentially he was putting a 550 target on it or something effectively. But I was happy to see that because I got a lot of respect for him.
Yeah, no, that's great. Yeah, I saw him at Beaver Creek. Yeah, he covers endurance gold. He covers Snowline. He covers Hercules metals. Yeah, he's definitely a good guy to read his commentary on junior miners. Yeah, so that founders metals is interesting because my take is the company management dealt with it about as well as you possibly could have. They didn't sell it in the market. They didn't crush the stock. They crossed it to a large institution, a relatively strong long-term shareholder. So they did right by that. I understand the tax implications could potentially be quite onerous for some of these management team members. So they just had to sell because they had to pay their tax bills. So yeah, there's nothing wrong with what they did, but yet any investor who pulls up SETI and looks at those filings and adds up those dollar amounts, the optics are negative. There's no way around that. And there's some people that will just look at those SETI filings and they will not own the stock for that one reason. They won't look any deeper. They won't look at the drill results. They won't bother to read your stuff explaining what happened. They'll just be like, management selling, I'm selling, I'm out too, right? So the stock drops 30% basically as a result of that. There was no other reason for the stock to drop 30% aside from that. And I think it gave a real entry point to people that maybe had not been on that $2 to $3 run. And now they got a chance to get back in at 220 or 230 and see if it goes back to 3 or maybe even higher. But yeah, it's just the way it is. The optics of management selling shares is always going to be a negative thing. There's really no way around it.
CEO.ca is always a good sentiment indicator, and there were, founders has always been odd. As I've said before, it's one of those ones that, given how it's traded, you don't see that much, chatter in the channel. But there was quite a bit of it after that announcement. It wasn't positive. There were a lot of pretty unhappy campers who were pretty pissed about that sale. Like I said, it didn't really bother me, but it definitely bothered a lot of other people.
Yeah, just because just the way the filings hit, like they kind of all hit on the same afternoon, and there were a lot of them, and the dollar amounts are pretty big. It's like, geez, these guys really offloaded,
Yeah.
But it's one institutional buyer,
Yeah.
and that's a long-term holder. So I look upon Founders Metals favorably. I think their hit rate in terms of gold intercepts is exceptional, and they have a lot of intercepts over 100 gram times meters. We don't see companies putting out results with those kind of stats very often, and I think that's a pretty positive indication that the gold system is pretty pregnant with gold, and they keep finding it, and they keep increasing the scale and the strike extent there at Froyo. So that's a good one.
I'll probably be doing a call. I'm not sure. Probably next week with him. I mean, he actually approached me and said he wants to do another. He and I have done a couple of sort of, I guess, technical, if you will, more technical Zoom calls. He wants to do another one, which tells me in his mind he thinks they figured out a couple of other things that he wants to talk about. There should be a batch of results from Buse, which is about 2 kilometers, maybe 3 kilometers down trend from the main area at Froyo where they've been drilling. It's basically it's an intrusive, and it's a target I always kind of like because it has low tonnage potential. I don't know whether it's going to deliver on that potential. We'll have to see the drill holes, but I know they're going to be putting out, like, I don't know, 8 or 10 holes at once because they want to explain what they think it all means. And I think I'll be doing another call with Colin after that. So I think if Buse really comes through, that would help a lot. But I don't, I'm kind of agnostic on it. I'm waiting for the drill results.
All right, VR resources. So a couple of news releases. This one has been a real disappointment in 2024. It's not a surprise. It's been a few months in coming, but there's a couple things happening here. They put out results from New Boston, obviously low grade, not what we hoped for, but it seems like the market already knew that because it already had knocked it down to 4 cents. Then we get a new CEO, so the VPX is now the CEO. Michael Gunning is now the chairman, the longtime CEO, and I think the founder of the company is now the chairman. So we got young blood in the CEO suite, and they're pivoting to Northern Ontario, copper gold projects that look pretty interesting.
Yeah. I mean, I guess it's fair to say that shareholders weren't that surprised by the results out of New. I mean, just based on the stock return and the descriptions of the 2 holes that they put out assays for a few days ago. They didn't sound that great when they put the descriptions out. I mean, I wasn't expecting that much. I was hoping for a little more than we got, but I haven't had a chance to talk to Mike and Justin. I'm curious to know. I'm curious to know whether there's any thoughts to going back to New Boston, just dealing with the moly, because New Boston has the potential to be a very large moly deposit. Although I think they need to find higher grade, a bit higher grades than the historic stuff for it to work. Justin taking over CEO was interesting. I know Mike's been very happy with Justin's ability to communicate and his use of several social media apps that Mike isn't super interested in using himself. And I think Mike just thought it was fair to Justin, given how hard he's worked, that he get the position. I don't think Mike's going anywhere. That's my sense of talking to him. And I agree with you. The stuff in the area looked interesting. The thing with VR is you got to understand if you're buying the stock, what you're getting into. There's never been any pretense about it. They like looking for new targets, which I like. They're go big or go home, which I like. They're not looking for small stuff; they're looking for big stuff. But by its nature, that type of exploration has a very low success rate. I mean, you're going to miss way more often than you're going to hit with that kind of program. So that's, you got to have your eyes open. The issue I think they're going to have now, I think they still have, I don't know, $1.5 million, maybe $2 million on hand, so that they're not broke. But are they going to need to finance before they drill one of these Northern Ontario projects? They picked up 3, and they say one of them's drill ready, the other one they think will be soon, and 2 of the 3, the drill ready, and the one almost drill ready, they already have permits. So in theory, they can drill it, but are they going to have to raise money before that? And can they get price before they do that? I think it's going to be tough. I mean, as I've known Mike Gunning a long time, and I'm a big fan of his. I like Justin a lot too, but I don't know any illusions. The simple truth is, when you're doing this kind of exploration, after you come up short twice, 3 times, 4 times, 5 times, the market's probably just not going to be there. I'm not sure what they're going to do when it comes to financing. That's my biggest concern, is they're going to have to dilute the living crap out of it to do a real drill program. I don't know the answer, honestly.
Yeah. The New Boston, I mean, look, obviously 2 drill holes, into a porphyry target is not high odds of success. I mean, 2 drill holes. I mean, you'd rather have 5 or 6 at least. So that definitely kind of the slow drilling, the challenges they have with the drill program definitely hurt them. And obviously it helped to knock down the share price ahead of the results being announced. But yeah, I feel like for some of these big targets like that, you got to set yourself up for some success. I mean, obviously, look, it's exploration. Odds are you're not going to make a new discovery. Everybody knows that. I hope everybody knows that. But at least give yourself a chance with half dozen holes, 10 holes. Give yourself a chance. But 2 drill holes is not good odds to say the least.
I think looking back on it, I think Mike's going to probably, I assume Mike's going to regret not taking one. Was in a situation, where they took every dollar they could when they did that last financing. I mean, they could have done another like $500,000 or something easily, because they were cutting everybody back. So they could have actually taken more. And in retrospect, they obviously should have.
Yeah, I mean, it looked like a great target. I mean, it still might be there, but will we find out? Right? That's the question. I like Justin.
The drilling conditions are so bad too that the drilling conditions have really hurt. And I don't know that there's any easy fix to that. The drilling was just so tough and so slow.
Well, they could come in with an RC rig, right?
Yeah, RC is not ideal because it won't really give you the structural information. But that might be the way to go, is to say screw it, do 2,000 or 3,000 meters of RC, and just if you find grade somewhere, then you can worry about going back with a core rig.
Yeah, you drill for grade, I think, first, and narrow down your target area, and then you drill for structure. But what the hell do I know? What else do you want to talk about, Eric? We got about 10 minutes left. The MIF is this weekend in Vancouver, Friday and Saturday. Who are some of the companies that you've invited?
Well, there's a few of them. I invited Onyx, and Onyx is another one where I really like the management team. They've got stuff in the Yukon. They've got and stuff in the Timmins camp. They didn't drill in the Yukon, as I think a lot of people expected, and as you can probably guess, I think the reason why they didn't drill is the whole Victoria Gold situation. I think a lot of I know 2 or 3 companies up there that were ready to drill that just kind of pulled back this summer and decided to wait for the dust to settle and for the politics to get a little bit more calm, I guess. So they're going to continue to focus on Timmins. They put out a really interesting drill hole last week, and it was about 45 meters of almost 1.9 grams. It was interesting because it had two 4 or 5 gram subintervals, fairly long ones. That's from what they call the Argus zone. Argus is kind of it's similar to a lot of the other projects in the immediate area, that some of which have very large resources. It's basically volcanics that have been, sheared, and you've got pyrite and silicification injected. The gold comes in with that, and they've had a bunch of, decimetric intercepts, 80, 90, 100 meters from Argus already, but by and large they were like 0.5, 0.6 grams. It didn't really float my boat, to be honest. I could understand why management was interested in it, because it is the regional model for the big deposits. This is the first hole that really looked like something that might be mineable. They've done a couple more deals to pick up more ground, and I think I think they're waiting to get some of those done. Between you and me, I think there may be another shoe to drop there. I know they're still negotiating on ground, but they also have a couple of million, and they've got they still have a bunch of snowline stock left. So that you take all of that into account, they probably get 2.5 or 3. It's not that expensive to get going in Timmins. The logistics are quite good, so they say they're going to they'll be back there next quarter. They're actually just doing some stripping now. This intercept was a little bit on the deep side, admittedly. Based on the geometry, they think they know where it comes to surface, and they're stripping and mapping and sampling right now, just to see if they're right about where it comes to surface, and that gives them the potential to actually drill some shorter holes and hopefully get results like that, and be able to do a few holes without having to worry about going back to the market. Another one I added. The CEO is a perennial favorite of mine. The stock's been a disaster, but I've got a real soft spot for the CEO. So once more into the breach, dear friends. Once more into the breach, and that's Adamera. The biggest advantage Adamera has right now, if you want to call it an advantage, is that it's got a $3 million market cap. So it'll have some torque to good results. And what they're doing, and I'll admit that I actually prodded Mark to do this, so I'm happy he's doing it. They've got a small property called Flag Hill. It's almost in Republic. I mean, I've been to the project. The Republic camp, there's a few different areas within the camp where the ounces were mined, but the most important trend is the Republic trend itself. It's more or less north-south trend. It's classic low sulfidation epithermal veins. What was impressive about Republic was, they mined 4 million ounces out of like 3 different deposits, I think it was. But the average grade on those things was like 22, 25 grams. Hecla's mine, north of where Flag Hill is, I think they did a couple million ounces, and the average was an ounce. That's what interests me about it, is that you don't need, volumetrically, you're not going to need a huge amount of it. So what Flag Hill has is it's got a sort of a set of parallel veins in the same trend. They know they're gold bearing. I mean, they've got up to 6-7 grams on surface. Based on the metal ratios, they're pretty sure they're high in the system. So if there's a boiling zone, it's going to be, at 100 meters or 200 meters depth. So the only way you're going to find out is to drill it. This was something I'd hoped he would drill years ago, to be honest. He's had it for a while, but I kind of bugged him about going back to that. And I know he's talking to some of the neighbors, so we might see him pick up some more property. This area is mainly real estate. Most of the mineral title there is actually attached to land. It's not mineral claims per se. It's mineral rights. Flag Hill itself is BLM claims, but most of the stuff around it is private land. If he can get his hands on some of that, the big advantage, and it's a really big advantage to private land, of course, is there's no drill permitting. And what I like about this is it's simple. It's not. This isn't going to be let's target for 3 years. It's let's bring on our company-owned rig. It's going to cost next to nothing. put some holes in it. It's gonna hit or it's gonna not. I mean, I'm very comfortable they'll hit gold veins. It's just can they find the boiling zone where you're getting an ounce or 2 ounces across 2 or 3 or 4 meters. That's basically the bet. And I mean, I like the odds of it. I mean, I'm buying the placement that he's closing in the next couple of days. So so that's another one that I'm
Yeah,
buying.
that's interesting.
Third one. It is like it's what I like about it is it's nice, simple, cheap. It's not big airy fairy thing. It's like we know these veins come to surface that aren't the graded surface, but they're low sulfidation epithermal. We think the boiling zone's deeper. We're going to use our own rig. It's almost in town. The logistics are phenomenally good. It's going to be very cheap to drill. So even with 200,000, $300,000, $400,000, he could probably put 10, 15 holes in that thing. Like it's very cheap to drill there, the way he's doing it. So I just like it. It's just a straight up, pays your monies and takes your chances. Like it's just a
This is
straight up
in,
old school drill spec.
this is in Washington State, which is kind of,
Yeah,
to say the least, gone dormant for mining in the last 20, 30 years. I think like
yeah,
a lot of things like Idaho, Washington, even, Wyoming, sort of during the Clinton administration in the 90s, just sort of killed the mining sector in
yeah,
these states. But this area of Washington is known for gaudy gold grades. You're talking about like almost an ounce per ton average grade, and millions of ounces of gold have been pulled out of the ground here, in the Republic gold region of Washington. So it is interesting. It's sort of reinventing, an old mining, region where there's theoretically going to be some of these high grade gold zones, in the low sulfidation, epithermal systems, that are still probably there, just need to be found. They haven't.
Well, and Kinross is sort of kind of still there. They still have their mill. It's been on care and maintenance for I don't know 10 years. Word on the street, according to Mark, and he hasn't been able to confirm it with Kinross. So he said, I don't know if this is true. He said, I do. He said, I know that they've been doing. It's no secret locally. They've been doing a lot of work and a lot of drilling at one of their properties called K2, which is sort of the northwest corner of the Republic camp, and they got about 1 million ounces there. Fairly good grades. I think the ground conditions are a little bit tricky. That's what's held them back. But the word on the street is that Kinross is going to go for it and put K2 in production and restart the mill. I mean, and obviously, God willing, Mark finds a couple 100,000 high grade ounces. They're the obvious buyer.
All right. I think we'll leave it there. It's been almost an hour, Eric. See you at the conference. Thanks for this chat. And until next time, thanks everybody for tuning in. Look for this to be uploaded to my YouTube, Goldfinger Capital, over the next couple of days.
Yeah. Thanks, everybody.
Cheers.
Thanks, Robert.
Pleasure.